This is Andrew Stotz of Stotz Investment Research, looking at Malaysia, which seems to have moderate risk and moderate valuation. Remember, I look at 4 different areas in a country. Let's start with the first area in the upper left-hand corner, which is related to GDP. First of all, we can see that the GDP growth over the last 4 quarters, the blue bar, was at 4.61. This is relatively fast GDP growth relative to other countries in the region. Now, private consumption was the main driver. You can see that the yellow bar is 3.31. How do I get that? Well, private consumption grew at 6.3%, and that is 52% of GDP, so almost half of that. So therefore, the majority of the action in GDP came from private consumptions. The exports contributed the least. It was almost zero. So really, it's a private consumption story and not a bad growth there. Now, let's take a look at the overall market and see what's going on there. First of all, we can see the Malaysian market. The yellow line is going up, but relative, the blue line, to Asia, it's still a laggard. Now, valuation on a price-to-book basis is not expensive. It's about 1.6 times price-to-book. And that relatively low price-to-book comes with a lower profitability, roughly 10% ROE. Not particularly great. If we look at the Stotz 4 elements, where I rank each country relative to the others in Asia, let's take a look at it right now. And what we can see is that the blue bar is the overall ranking of FVMR, and that is a relatively unattractive. You can see on a scale of 1 to 10, 10 being best, it's a number 3. And why is that? Well, fundamentals are pretty low, ROE and other measures. They're below average at about a 4. Price to book is relatively cheap, and dividend yield is above average. So it's looking a little bit cheaper than average at a 6. Average would be 5. And momentum in growth and price, both are poor. And of course, that's what usually is a problem getting a market to move. And then finally, the risk, if we look at the price risk or the volatility of the country, it has a low beta relative to Asia, ex-Japan, and low price volatility. It has been all of the time a low volatility market. Finally, let's just take a look at the market for a moment. And the first thing we want to look at is the largest sectors. Financials are 21% of the market, industrial 16%, consumer staples 12%. What we can see is the best performing sector has been infotech, and MYEG services is up 36%, about the same as the tech sector. The worst performing was utilities, which was basically flat, with Petronas gas down about 7%. So there you have it on Malaysia. Not highly attractive, let's say moderately attractive at this point in Asia. Get access to additional research and articles by joining our free newsletter at becomeabetterinvestor.net/join. And guess what? If you do, I'll see you there.